Alright, here we go. Today is Monday, August 10th, and this is a post-market review for today's activities. This is perhaps one of the most important videos I've made so far, because we will look per usual at the closing analysis of the market and the sector performance and the futures, of course, and the heat map to see which names outperform and which names underperform. This time around, however, we will do something different. We will do a different exercise because, as you've heard throughout the day, analysts came out of the woodwork today saying that there is a shift from technology to small caps, aka value, and now they're recommending the rotation to small caps, aka value. Never mind the last week, of course, they were recommending tech, but this is the flip-flop game that the analyst community does all the time. They just follow whatever the consensus is. However, they did not tell you the reason behind the shift, and I will tell you exactly what the reason is. And then we will go right away to the exercise. And the exercise will be basically me going through the heat map and showing you how to pick laggards, which names. You add these names to a list, and then you watch and wait for the signal of the reversal and the rotation from tech to small caps and laggards, and you buy those names. I will show you exactly what signal I'm looking for from the charts. And of course, the shift already started, but at a small magnitude. This will intensify and snowball in the days and weeks to come if the prediction comes to fruition that we indeed will shift from the winners, aka technology, to the laggards, aka value. But not all things created equal. Even within the sector of value, you need to pick your names. And this is why the exercise is very, very important, because I will show you how to pick the right names. And now, without further ado, let's go to the closing of the market. The Dow Industrial Average was the outperformer today, closing almost 358 points or 1.3%. And the S&P 500 closing in the green by 9.14 points or about 0.2%. And of course, the underperformer of the day closing in the red is the Nasdaq. It closed well above the lows due of course to the rally in Apple. Apple was the only notable outperformer in the technology sector. But here it is, down 42.63 points or 0.39%. And the sector's performance at number 1, energy, number 2, industrials, and number 3 for the bronze, materials. The laggard, of course, and the loser of the day is the technology sector. Shifting to the futures market, the winners are crude oil, lumber, there's no stop in lumber, up 1%, 2% every day it seems. And metals up big, silver, platinum, palladium, copper, even gold by a little bit. And of course, lean hogs. If you've watched my video from Friday, I called the bottom in lean hogs. I said the lean hogs is forming a bottoming process. And what do you know? Lean hogs rallied today. The underperformers are orange juice. Orange juice caught support from 115 level that I identified. However, it gave that up and now it's sliding in the red. That is very bearish. And there will be more pain to come for orange juice. Likewise in coffee, I called the top in coffee. I told you there's a short-term top in coffee. And after that call, coffee been closing in the red day after day. Today is no different. And I see more bearish outlook for coffee, at least from a charts perspective. Coca giving up today, and of course gas closing in the red as well. Now I will shift into the heat map. We will start into the analysis of the heat map, and while we're there we will shift into the exercise I told you about in the beginning. I will slow down a little bit. I'll go slower so everybody can learn. So here we go. So here we are at the heat map right now. This is the action that happened today. Right away, your eyes are drawn to the industrials and energy sectors that close in the green, along with financials. The laggard is clear from the map. You see the red across the technology sector, with few exceptions. Of course, Apple closed in the green today, and that drove the Nasdaq to close well above the lows. Now, we've talked about this yo-yo game that's been going on for the last few weeks between winners versus losers, aka momentum versus value, aka reopening versus stay at home, or rather, stay at home versus reopening stocks. And I said that this battle, the yo yo game back and forth, will sort itself out. One sector will come on top and another will fade out. And we are seeing the first steps and the first signs of the rotation of the market from the winners, the technology sector, to the laggards and the losers who got hit hard by the COVID correction. But we've also discussed another theme, and I will show you why I'm saying that the shift is already happening. I will show you in the heat map, the signs and the signals. I'll prove it to you in a little bit. But we've also talked about another theme of winners versus losers within the same sector. That theme started to emerge very recently. And I said that this theme is very important because it will make the market into a picker's market in the upcoming period, meaning that you have to pick your stocks. There is no tide that would lift all boats or sink all boats. You cannot be a parasite and sliding on a performance of one stock or underperformance or another. You have to pick your stocks correctly. Case in point, we've seen the divergences today in the same sector. Certain names got rewarded, others got punished. Case in point, let's go right away to the credit services sector. You see AXP, American Express, overperforming today, closing in the green. MasterCard closing in the red. Even Visa closing a little muted, a little positive, but you see MasterCard getting hit harder. And I said that GM and Tesla, I gave that example in my Twitter account, that GM overperformed today, up almost 5%, Tesla down more than 2%. Somebody else pointed out the trading INTC, Intel versus AMD. You see Intel overperforming, AMD underperforming. In the banks, you see Bank of America overperforming, Wells Fargo underperforming, closing in the red. What about consumer defensives? You see Procter & Gamble closing in the green, Clorox, different story, closing in the red. This is what we have in hand. The stock market now will pick the winners and the losers. We're not talking about winners and losers in the real economy, meaning that Tesla is selling more cars than GM or Tesla has more momentum than GM and the stock outperformed GM. We're not talking about that when we say winners versus losers. We're saying the market will pick its own winners and losers, and it decided to pick based on value. The market is saying, I'm going to pick the laggards and I will make them the winners in the next upcoming period. And those names that were rewarded already and flew really high, these are the names that will be the losers in the next coming period. And that begs the question, why are we seeing this shift? The shift from the overperformers in the COVID correction versus the underperformers in the COVID correction. Why is the rotation happening now? A lot of analysts came out today and they said that we're seeing the rotation and you should be prepared for the rotation. They never gave the reason why, though. And I think because they're afraid of getting political. I am not afraid of getting political. I will give you the reason right away. But before we do that, let's talk about two scenarios of the correction. You and me know that there is a correction coming in the market, a big one. We are in a bubble. We're way extended. There's a massive correction happening. But there are two scenarios of that correction. Number one is the overall correction, meaning that every name you see here in the map will get hit hard and will be trading in the red. However, even in that scenario, the names that already been hit will not get hit as hard as the outperformers, aka tech. Why? Because tech will be used as the ATM to take cash out. This is the reason why that even in an overall correction scenario, tech will be punished harder than the laggards. What will cause the overall correction? A black swan event that we don't know about yet. It could be technical. Remember, in 2018, we had a big correction around February. Nobody knew what the reason is. They said it's because of wages. They said it's because of interest rates. It's because of inflation. But they didn't tell you it was technical in nature. The correction was technical in nature. The market flew really, really high. And the algos got triggered to sell. The third reason for the overall correction, the big correction, could be that China is preparing for revenge. Meaning, China's being silent right now, even though we hit them hard with TikTok and WeChat and Tencent and all of that. But they're waiting and waiting because they want to punish Trump personally. They don't want to punish America. So if they're preparing for revenge, they're probably going to wait for an October surprise. They will surprise the market in October with a really severe, erratic decision that would crash the market here in the US, and supposedly that would hurt Donald Trump. I'm not sure that that would work, because if China does that, that would actually embolden Trump's re-election prospects. So I don't think that scenario will take place due to a China revenge. Now here is the second scenario, and the most likely one, that we're not going to see an overall correction, but we will see a tech correction, a tech-specific correction. And here is the reason that the analysts did not say today. We know that Trump's polls are down. He's not doing so well, specifically in battle states, Pennsylvania, Michigan, Wisconsin, etc. Yet the president has tricks up his sleeves that he can pull and change the narrative and change the polling to his favor. One of those tricks is, of course, announcing the vaccine. Now, you know that the Trump administration allocated billions and billions of dollars for taxpayer money to vaccine companies. We're talking about Moderna. We're talking about Novavax. We're talking about Pfizer. We're talking about Merck. We're talking about all the companies, the smaller biotech companies that received funding from the government for the development of the vaccine. Now, Trump did not do that out of the goodness of his heart. He did that to expect something in return. He wants the vaccine to be developed before the election, because announcing the vaccine, you don't need to have the vaccine right away, but announcing the development of the vaccine successfully. Perhaps it will be introduced in December. It doesn't matter. But the announcement itself will send the stock market rallying, specifically the Dow, the S&P, the IWM, all the laggard sectors. However, it will crush technology. Technology is the sector that benefited from the so-called stay-at-home culture. And either way, that would be a big success for the administration. He will go around claiming success, saying, look, we developed a vaccine in a very short amount of time. Who cares if the vaccine actually works or doesn't? It's all a crooked deal meant to help the prospects of re-election. The impact in the market will still be the same. Laggards will rally significantly, aka small caps will rally significantly, and tech will get crushed really, really hard. You will see the shift happening fast. Selling technology, pouring money into all the laggards, no questions asked. Knee-jerk reaction. This is the scenario that I see for now. So how do we play it? What do we do now? Here is what you do. Now we're looking at the heat map from Fenvitz. You can do and use any platform you want to use. You can use a table view, a list view by sectors. It will work exactly the same as I'm doing here, but this is more convenient for me. I will switch to the year-to-date performance. When you look year-to-date, you see that technology is way overperforming. Look at Amazon up over 70%. Meanwhile, look at energy, look at banks, look at other sectors that are still trading in the red year to date. We will go through each sector and try to pick the names, the best names that will outperform and will rally significantly upon the announcement of the vaccine or upon the rotation, if the rotation happened before the vaccine, because the market already knows the vaccine is coming. The market is already anticipating and pricing the vaccine's announcement. Right away, we go to banks. I'm not interested in any banks. I never invested in banks since the financial crisis, and I will not start investing in them right now. If you are interested in banks, you go with Warren, the big buffet, and you go with Bank of America. But me, I'm not interested in banks. Let's go to credit services. Right away, my eyes are drawn to, and by the way, grab a pen and paper so you can write these names down. Write a list. Right away, my eyes are drawn to AXP, American Express, down 20% year to date. This is a name that upon the announcement of the vaccine and upon the announcement of the rotation from tech to the laggards, this is a name that will rally significantly. It's already been rallying. You've seen it right in front of you. The rotation is happening if you're paying attention, but this is a name that is on the top of my list. We looked at AXP earnings a few weeks ago. The revenues are down because people are not using the cards. Amex is used in hotels, traveling, airlines, cruises, etc. They're not being used, granted, revenues are down. However, the most important point from the earnings, people are not canceling their cards. You saw that the membership fee revenue staying the same. That is your sign and signal that AXP will outperform in the rotation. Shifting to the technology sector, am I interested in technology? No, I'm not interested at all, even though Intel really lagged, but I'm not interested because I am shorting the Qs in general, and these names will get hit along with the Qs. You could see some pockets of outperformance from IBM and Cisco. These guys lagged. Old school tech might outperform in the rotation, but I'm not interested in tech. Tech had its run. Goodbye. I'm shorting tech. Let's switch to something else. What about the healthcare sector? Am I interested in anything in healthcare? No, this is a winner-loser situation even before COVID. I'm not interested in anything in health here. I don't see any opportunities worth taking. Now, let's go to entertainment. Entertainment, right away, my eyes are drawn to Disney, down 10% year to date. I already have a position in Disney through options that I'm going to exercise this week. I am interested in Disney. This is at the top of my list. I'm writing Disney down right now. Disney streaming business will outperform and will be the #1 revenue generator for Disney. Upon reopening, the only good news for Disney, parks revenue will come back and entertainment revenue will come back. Disney should be right there on your list for one of the top names for the recovery, aka the rotation, aka vaccine announcement, aka whatever you want to call it. And I'm scrolling down and I'm looking at names. I'm looking for laggards here. Right away, my eyes are drawn to Live Nation. There you go. Live Nation down 33% year to date. You have seen the outperformance of Live Nation today. Here is your signal that this is a name that will come back. They reported earning and they said that people are not canceling their tickets. They're extending it. They're telling that the shows will be rescheduled. People are keeping their tickets. And we know that the people who are going to go to concerts are young people. Young people don't care about COVID and any of the restrictions. If they announce a concert today, there will be 100,000 people filling up a stadium. No problem whatsoever. It's only the restrictions that are prohibiting young people from partying and going to concerts. So this is a name, upon the announcement of the vaccine, this is a name that would rally significantly, like you've never seen before. So I'm writing Live Nation right down in my list. And now I'm looking, am I seeing anything here? Not really. There are some names that are lagging. WWE, IMAX, not interested in these. Switching to video games, nothing here. They outperformed. How about telecommunications? Not really, not interested. You could say that AT&T could be an opportunity, but not interested, boring. And now shifting to consumer cyclical. Here where it gets a little more interesting. Let's take a look at auto manufacturers. GM is lagging, down 27%. GM is a name that pays 5% yield. They've announced the electric Hammer. They've announced the electric Cadillac. It doesn't matter when they're going to produce them. What matters is what their announcement was and will excite younger investors to create momentum in GM the same way they created in Tesla and other names. In addition, this is a name that pays over 5% yield. So watch out for GM to become the next momentum name. I'm writing GM on my list. GM sales will recover. We're seeing already the recovery in Chinese sales for GM, and we'll see recoveries in North America and Europe, South America. But again, the announcement of the vaccine itself and going to normalcy will help General Motors stock. That is a name that I'm putting in my list. Now let's look at travel here and the cruises in general. Down big. You see the cruises down 60, 70%. Now cruises is a different story because cruises cater to the older senior population. The older senior population would not hop into cruises right away. They need to take the vaccine already. But it doesn't matter when they will take the vaccine. The psychology of the announcement alone will help cruises to rally significantly. Which name am I picking? Royal Caribbean. You've seen from their earnings today that they had the best financials among all the cruises. That is a name that I'm writing in my list for the comeback. How about auto parts? Not interested in these. Packaging, nothing here. Resorts, what about resorts? Resorts is a mixed signal. You can buy any of the casino names of MGM, Las Vegas, Wynn. However, I think the recovery in gambling will take a little while. These names, make no mistake, will rally again, but I'm not interested in them. They don't excite me at all. And now I'm looking, I'm trying to find some opportunities here. Right away, my eyes are drawn to Planet Fitness. Now, this is a name that would rally upon the announcement of the vaccine or the rotation because the anticipation of people going back to the gym. This is a name that's hit hard, down over 31%. I'm writing this in my list. And right away, I'm looking at Six Flags. Here's another name that will recover due to the vaccine. It's been hit really, really hard, down over 60%. This is a name that will outperform in the rotation. I'm interested in this name. I'm writing it down. Shifting to the lodging, aka hotels. You've seen what happened with Marriott today. Marriott saying that there's a recovery in China. Things are getting better with the revenues in China. In the rotation, this is a name down 38%. You bet that the money coming out of technology will go through Marriott's way. I'm writing Marriott down. How about footwear? Not really. There's nothing there. Nike already made a lot of profits and outperformed. Not interested. How about restaurants? When you look at restaurants, you see Starbucks down 13%. But Starbucks, again, we're going to keep some of the stay-at-home culture. So not really interesting. 13% doesn't really interest me in terms of a comeback. It's already made a lot of the losses already had. But looking at the list, I'm looking at Cheesecake Factory. This is a name down 33%, over 33% in the rotation. This is, of course, an indoor dining. They don't have outdoor in many of their locations, mostly indoor. Mostly younger people. This is a name that will recover really, really quick, specifically in territories where they're already recovering from the coronavirus. This is a name I'm writing in my list. Cheesecake Factory. And now going to apparel. Am I seeing anything in apparel? Well, it's a mixed signal here. Lulu, of course, outperformed because Lulu is more into the indoor yoga pants, all the workout apparel. And of course, it has a cult following, so it outperformed during the correction. What name lagged? You see Ross. Ross could make a comeback, but the name that I'm looking at right here is TJ Maxx, down about 10%. When people start to come out and go out and about, they need more clothing. They need new clothing. This is a name that will recover really, really fast. And I'm not really seeing here anything worth buying. I don't see any opportunities here. Harley Davidson, nah, I'm not interested in that one. Not interested here. Let's switch to consumer defensives. Consumer defensives, where are the laggards? Not seeing any laggards here. How about here? Coca-Cola down 13%. I am writing Coca-Cola. We've seen their earnings. Yes, they're down, but they're starting to bottom. They're starting to recover. This is a big yield name. Upon the recovery, the normalization, going back to stadiums, etc., you bet that Coke will outperform. I am writing Coca-Cola in my list. And now let's shift. We have Diageo here, but I'm not. Diageo is more in liquor business and hotel lobbies and bars. There's a better name here that I would pick, which is Budweiser Anheuser-Busch, down 33%. This is a name that will recover fast upon the normalization. Their sales, specifically to restaurants. We will see the recovery in restaurants ahead of bars. This is a name that is more related to stadiums, more related to restaurants, and it will outperform in the rotation from tech to the laggards and the losers. I'm writing Bud down in my list. And looking around, of course, here is a name that's very interesting, Cisco with an S. This is a company that, of course, supply all the utensils and the supplies for restaurants. Right now, there's no business. They got hit hard by COVID. When we announce a vaccine, when we rotate from winners to losers, regardless if we have an actual recovery on the ground, the psychology alone moves the market. This is a name that will get and catch a major bid. I'm writing Cisco on my list. Farm products, are we interested here? Not really. What about consumer defensives? Mondelez, not up big. It's up by about 1%. This is a name that I'm already invested in. I am writing it down my list. I will definitely add more to it. Tobacco, we're not interested. How about industrials? Let's shift to industrials. Right away, you look at the laggards. There's General Electric. Not interested in that one. That is a name that's been weak way before the pandemic. But I'm looking at a name here, EMR, Emerson. We saw the earnings last week. They were better than expected. Yes, there were a loss year over year. However, it was better than expected. And you see the bottoming process. You see the bounce back, down about 13% year to date. I'm writing this one in my list. And by the way, before I forget, because it looks like I forgot something here, I can't find it, but I'm writing also Alta in my list. Alta, where is Alta? I can't find it. It's somewhere around here, but I can't find it. But Alta is a name that you definitely want in your list. Of course, the reason is very obvious. As people start coming out and they're not wearing masks anymore, they need more makeup, they need more products. And Alta, of course, provides services in store besides selling products. And these services will start to pick up. The revenue, the business will start to pick up again. Alta is in my list. And here it is, Alta, right at specialty retail. Alta is down about 20%. So this is why I'm writing it down. A recovery is ahead for Alta. And of course, looking at the airline sector, the poster boy for the correction, the COVID correction, down big across the board. So which one are you going to pick? It doesn't matter. It doesn't really matter. You pick any name you like. They're all going to bounce together upon the rotation and the announcement of the vaccine. My pick is Southwest. Southwest is only down 38% compared to other names that are down over 60% like United. However, my theory of picking Southwest over others is that other names are more related to corporate travel. The majority of their revenue comes from corporate travel, and we know that the stay-at-home culture will still stay with us for longer than we expect. Meanwhile, Southwest is more of domestic travel, individuals traveling. I expect that to recover faster and ahead of other names. So I'm picking Southwest, LUV. And of course, energy. Energy is a really tough one. I already have Chevron. I have a small position in Chevron. I would keep that one, maybe add to it upon the recovery. Chevron is more in the downstream business, aka gas station. If we go back to normalcy, people will travel more, will drive more, they will need more gas. This is exactly where Chevron downstream business is compared to, say, Exxon and other names. Chevron is on my list already. All right, looking around, are we interested in something in materials? Not really. How about utilities? Not really. Real estate? Yep, not really. Now we picked a good list of names here I have in front of me. And of course, let's vet our thesis. See if these names, what you're seeing right in front of you on the screen, this is the year-to-date performance. Let's switch to the 3-month performance. Keep your eye on these names that you just wrote down and look at their performance the last 3 months. Are we seeing the recovery in these names? Are we seeing the shift? Let's figure out. Here we go, the 3 months performance. Like you see, technology is slowing down a little bit, but look at AXP, up 10%. Right away, Disney up 19%. Another name that we picked, where it is. TJ Maxx up 14%. How about Marriott, up 7%. You look at Cisco, down, up 8%. You look at Emerson, up 18.3%. So you see that the performance, the last 3 months is improving for these names. They're picking up from the bottom. Let's switch now to the 1 month performance and let's see how they performed the last month. Right away, your eyes are drawn to the muted action in technology. Here is your shift. You see it right in front of you. The names that were green now turning red, and the names that were red turning green significantly. Look at AXP, look at Disney, look at Live Nation, up 5.7%. Look at all these names that we just picked. Look at a name like Emerson, up. Look at a name like Cisco, up. Look at a name like Budweiser that we just picked, up 6%. Coca-Cola, these names are starting to outperform. Marriott, TJ Maxx, you see Alta, 6%. And you see right away the recovery in these names happening right away. Which in 1 week performance. Let's see what happened in 1 week. You see now it's getting redder for the winners, the names that outperformed. Technology is getting more red. Meanwhile, what is getting greener? The grass is getting greener right there. AXP, again, Disney, Cisco, Bud, Alta, TJ Maxx, Emerson. All the names that we picked are changing to green. Look at Chevron changing to the green. Here is the evidence, and here is the rotation happening right in front of you. It will not be announced to you. You have to figure it out. You have to do the exercise that I just did right here to figure that out. And you see, of course, the 1 day performance. And here you go. The pictures now couldn't be more clear. Now, to look at it from the bird's view, let's look at the ATF performance. Let's go year to date. Here is the year to date performance. I want you to keep your eyes on the XLK right here, the technology sector, and the IWM, the small caps. Keep your eye on these as I change the period. Year to date, the XLK technology is outperforming small caps. Let's switch to 3 months performance. Well, you see now XLK and technology slowed down a little and small caps are starting to pick up. Let's switch to the 1 month performance, see what happens. Here it is. Look at this. The XLK is now lagging, only up 5%. IWM and the IGR are outperforming. Let's switch to the 1 week performance. The XLK is now lagging, where the IWM is in the green. And of course, you switch to the 1 day performance today. The XLK in the red, the IWM, the IGR in the green. Small caps are now taking the lead from technology. It could not be any clearer than this. Now, keep in mind, we're not going to go ahead and buy all these names that you just wrote in the list. What we're going to do now is do the homework. We're going to look at these names, look at their earnings report, look at the numbers, the valuation, the technical analysis, the year-over-year performance. We will pick the top 5 names only and make an investment in them. And of course, I'm not ready to go ahead and make a significant investment in these names unless I see a condition, a technical condition that will confirm the reversal from technology. That is, keep your eye on the MACD, the weekly MACD on the QQQ chart. If you start to see the line curling down, crossing to the negative territory, and start forming red candles, that is your signal that the turn and the tide has turned, and now the shift from technology is real and will happen aggressively. Watch the MACD from a weekly perspective. The turn is clear. You turn across the neutral line, and then you turn and you make a negative impression where you create red candles. That's all you need to see to confirm the rotation and the sell-off in technology. Now back to the heat map. You can do the same exercise, by the way, looking at the chart. You can do the same exercise picking what names to short. You go to the year-to-date performance. Right away, your eye is drawn to the technology names. That is the obvious. But you look at Zoom up over 260%. That will give a little at least. So that is a name you want to put in your short list. Scroll down, of course, you have a name like Peloton. Where is Peloton? You're going to find it somewhere around here. Where are you, Peloton? Here it is, Peloton, up 136%. This is a name that will give at least a bit during the rotation. And this is why today opened an opening position, a little bit of a short against Peloton that I could add to in the days to come if I see a confirmation of the rotation. Another name, a big name, of course, Clorox. Clorox up 52%, outperforming all the household and personal products out of the consumer defensive sector. You bet that Clorox will give a little. I'm writing it in my short list. You saw that Clorox performance today closing in the red, while other names closing in the green. So this is again a name that will get hurt if we have the vaccine announcement or the rotation from winners to losers. And these are, of course, preliminary lists. You have to do the homework. You have to look at the earnings report. You have to look at the technicals, the year-to-year performance, the valuation, and then pick the top 5 names that you want to go long, and perhaps the top 2 or 3 names that you want to short. Again, this is not an invitation to pull the trigger right now. I know we live in an instant gratification market where traders are expecting trades to be profitable right away. Of course, there's another side of the instant gratification from traders where when they see 1 day shift from technology to small caps, all of a sudden they want to chase and go all in small caps. What do you know? The next day, they switch it back to technology and they crash small caps. This is why you need to wait, you need to watch, and you need to watch for the technical signals that tells you, yes, we're switching from technology to small caps. But the purpose of this exercise is to have a list of names that you can do the homework in and then decide which ones you want to pick. Make no mistake, the rotation from tech will happen one way or the other, either with the overall crash scenario or with the tech correction specific scenario where we see an announcement of the vaccine and the psychology will take over the market, rewarding the laggards, the names that got crushed from the correction, and punishing the names that thrive during the correction. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and
follow me on social media.